Bank of Canada does what? Nothing. And in some Toronto areas, condo sales are down 25%. Yes, all this and more with our good friend and mortgage broker, Mr. Dion Begg, right after this. Here we are, my friends, with our favorite mortgage broker in all of the land, Mr. Dion Begg. How you doing, my man?
Hey, man. Good. It's been a busy week.
Busy week. And the news headlines just keep on coming. And a big announcement today. It's June 4th from the Bank of Canada. What do they have to say for today?
A whole lot of nothing, basically. So we've kept the interest rate exactly where it is. The overnight rate is at 2.75. I think, a couple of months ago, people thought that we would be on this continual rate drop at many meetings this year. And I think that sort of has been tempered a little bit. We actually, interest rates, as we all know, in the last couple of years have been used to control inflation. Inflation got crazy, so interest rates went up. Now, inflation, the last inflation print was very low at 1.7%. And you would think that would mean, this allows room for further interest rate drops. But what people are saying is because they're attributing a lot of this reduction in inflation due to reductions in, say, the carbon tax as one thing. But also I think population growth is on the downward trend for sure. We've had our slowest population growth quarter, I think, in many years. And so all of that is adding up to this lower inflation number. But it doesn't seem to have been enough for the Bank of Canada to say, okay, this warrants a further rate drop.
Yeah, and coincidentally as well, today, Toronto Real Estate Board released its May numbers, and we're going to jump into a few of those specifically here. And, as much as Dion and I are always the glasses half full type of personalities, it's not all rosy color all the time. We're seeing sales down and all sorts of stuff. And of course the rate hold might be good news to some and not so welcoming news to others. Toronto Real Estate Board, this should be no surprise to anybody. Listings are way up, sales are down, and the sentiment out there is just, man, I want to sell my house so I can go buy something, but we're just not seeing that activity out here in the market. I know I talk to a lot of agents, and of course that's your business, is to talk to agents to help their clients. It's kind of the same. Are you feeling that the same?
Yeah, I mean, the reality is that there are fewer deals out there, right? Especially on the transactional side. So in my business, we have two sort of types of business: purchase business and refinance business. And I will tell you that back in the boom days, 80% of my business was probably, say 70% of my business was purchase. And now it's down to 50%. And it's still, my brokerage is kind of an exception in that most brokerages are doing mostly refinances now. But we're pretty much, and it surprised me even, we're pretty much 50-50. Half of our business is refi, half is purchase. Now, we're fortunate that we work with a bunch of realtors who run their business like a business. They're very methodical, and they're the ones who in tough times will continue to succeed. So we are seeing those purchase transactions referred to us by our long-term realtor partners. And along the way, some people in our industry are struggling as well. So because there's fewer deals to be had, there are real estate agents in particular are making less income in the last year or two than they would have in the previous years. And I just anecdotally, I'll let you know that right now this week I'm working on a client file. He is a realtor, traditionally making well over 100, in some cases 200 grand a year. And these last couple of years have been well under that because of the reduction in just market volume. So I'm helping him through a difficult time in his life now, refinancing his property, just sort of to give himself a financial buffer until he's back on his feet. But I would dare say that he is one of thousands of realtors who are probably in the same boat right now in terms of that massive reduction in income due to the massive reduction in sales volume.
Yeah, everyone goes through it, and having the right people in your corner to help you through those times in your life is incredibly important. Let's look at some of those numbers, Dion, and I'm just going to flip the
Yep.
screen here. Of course, that's we've already said this. Cat is not out of the bag. This is old news already. But let's have a look at some of the sales activity. So what we're looking at here, this is right from Toronto Real Estate Board, their market report, their May market report, and you can see the first column on the left. That's this year, May 2025 versus last year. And the sales that we saw on the board were 6,244 this month. And you might think that's a big number. Well, compared to last May 2024 is down significantly. We'll look at some of the stats precisely, but you can see that's down quite a bit. It's actually not about, I know I have it right here in my notes, 13.3% down. And then you can see below that is the average price. Now, this is against all property types, condos to the big 4, 5, 6 bedroom homes, that type thing. And you can see that's also down approximately 4% year over year. Well, what I wanted to look at is something a little bit more data. So this is the pricing per house category. You detach your semis, your townhouse, and your condo. And I know a lot of people will jump into that condo because they're seeing condo listings up, and rumors might be out there with the sales happening. But you can see if you follow the 416 down that column, you can see that we've had 973 condos sell in the month of May. And that average price is $709,000, albeit here's where the headlines jump, because if you go to follow that column all the way down and the year over year change, this is the headline, down 25%. That's the condo sales. So we are seeing listings rise, and we are seeing sales dwindle, if you will. And not all these videos are good news. This might be good news to some as an opportunity to go purchase or look at. And we're seeing some of those numbers really jump out at us. And you'll see these headlines come out today. Down 25%, down 24%, down 25%, all sorts of stuff. But this is the reality of it, my friends. And you can see the average pricing there. If we look at detached, you can see it's down 5.6% in the 416 and similar to the 905 area. So we'll probably see. It'll be interesting as we think forward, as we move forward into the month of June here. Historically, May and June are really strong months on the Toronto Real Estate Board, and in most real estate cycles or most real estate markets. We'll see how the June buyers react to some of this information. And I had a conversation, Dion, the other day with one of our agents, and they were suggesting there's not a lot of buyers out there. And on one hand, absolutely correct. On the other hand, I will say this. If listings are up, most sellers, will say probably 95% of sellers are also buyers.
Right. You know what? And you are correct. And actually, that just brings to mind a deal that I have on the go right now, Gary. And this is really important for people who are thinking of selling and buying. So we have a client who has gone out and purchased a property at we'll call it $1 million. It's close enough to $1 million. I only spoke with them for the very first time yesterday. Usually, when a person buys or sells, we are involved even before they start to do either the buying or the selling. Right? We're involved weeks or months earlier. But the reason that I had this call yesterday was because they had gone out and done this on the advice of a different person, a different mortgage professional. And now they're in a situation where they don't think that they're going to be able to make this purchase, which they have committed to and waived their condition of finance on already. And so the situation is they purchased for $1 million. They thought they were going to sell their existing place for $900,000, and they've been caught in this price drop window, right? And so they're probably going to sell for less than $850,000 right now. And because of that 50 grand doesn't sound like a hell of a lot of money in the big picture, but it is for these guys. And because of this drop, it looks like this purchase is kind of in jeopardy. So it's one that we're still sort of working on and figure out how are we going to close on this, because generally speaking, and touch wood, when I tell a client that they can waive their finance condition, they can waive their condition, right? And they've done this with an assumption of a sale price, which I think was an unrealistic assumption. And we've got to be super ultra careful right now in terms of what are these assumptions you're making on the sale price. And I'll speak for the real. I'm not a realtor, but I'll speak for the realtors, which is most people think that their house is worth more than their neighbors, but it isn't. Because a buyer sees the sale of your neighbor's house and says, well, you're right next door or on the same street or neighborhood, therefore it's the same price. And so it's I know it's a psychological challenge for many people, and I know that a lot of realtors are having to have these tough conversations. But I'll say to people who are in this market right now, you've got to base your decisions on facts, numbers, like recent sales, and don't expect that you're anything special, even though deep down you feel like you are. Um, Hopefully, the realtors listening are, my cheerleaders right now. But this is the reality of what I'm saying.
I was trying to pull up some stats. I just can't pull it fast enough. I
Okay.
was having conversation with one of our realtors as well regarding homes in the Stouffville area, just north of Markham, just outside of the Toronto area. And it's always, I always go to Stouffville area because that's, where I live and grew up and all that sort of thing. And there's just, a couple of gorgeous homes on the market right now, priced fairly, and the big picture of things, however, it's just not moving. And when we were talking with the agent to help them with a pricing strategy or a repricing strategy, we looked at it. Well, what's the number of listings that are currently on the market? And versus how many homes have sold over the last 30 days, just to give that seller a little taste of reality, if you will, and same with the agent. And we saw about 20 sales over a 3-week period when we were having this conversation. You might think, well, okay, what does that mean? Well, there was 20 sales and approximately 100 properties, detached homes on the market. So
Okay.
your math or your brain should say, well, if nothing else came on the market, how long would it take to sell? And we're looking at a 5.5 month worth of inventory there, which is a lot. And just to
Yep.
help, people understand, okay, if I put my house up for sale, what's my competition? What are they priced at? And then how many homes are selling? And then that's just the reality of it is we're seeing a lot of great homes come up for sale, beautiful homes, well cared for. And they're sitting there because we just don't have that next wave of buyers coming through. We're not looking for a strong wave. We're just looking for a little momentum. And we're seeing a lot of offers being placed conditional on the sale of the buyer's house. So sellers are being a little bit more receptive to that. Now, the catch is if you put an offer in like that, awesome, good for you, and let's get your home sold. There's a ripple effect. That buyer is now receiving, who's also a seller, is now receiving an offer that looks very similar,
Yeah. Right. So
right?
they're
So
they're
there's that
subject
funny,
to that buyer. It's like a traffic jam, right?
exactly.
Yeah.
Everyone's waiting for that first domino, and
Yeah.
that's not always a good market position to be in.
Gary, just a quick question there. On these deals where, you're subject to, I will buy your house subject to the sale of my house. Um, Generally speaking, the seller is committed to a contract, but do these contracts allow the seller to continue to market the property and sell it to somebody else?
Yes and no.
Or right?
Uh, a good listing agent will negotiate, and most of the time we're seeing that you can still market the home while you have this accepted contract in your hands.
Yes.
And should another offer come in
Yes.
and get accepted, has to be accepted. Typically, we have a window there of approximately 48 hours to maybe 72 hours for that
Yep.
original buyer to firm
Right.
up. So that
Interesting.
home is
Yeah.
still on the market. I will say, though, because what happens, I will say that some buyers are hesitant to go look at homes that already have an accepted offer on it. And
Yeah.
understandably so, you just never know. But on the flip side, if you're a strong buyer, my friends, perhaps your financing is all perfectly aligned. You've already sold your house and you found a house that you absolutely love that already is sold. We'll call it sold conditionally with this type of offer. Go see it because you're the
Mhm.
stronger buyer. Go see it, place your offer, and negotiate. And I've seen it in the past too, where Dion, this, of course, we don't, as a buyer, we don't know what that accepted price is from the other buyer.
Mm.
However, I've seen it in the past where you've gone to some, as a new buyer, you've gone to submit an offer on a home that already has a deal like this, and the seller is willing to take a firm or a better buyer at a lower price.
Low price. Yeah, yeah, makes sense. Yeah, because of all the uncertainty. If you're a seller and you just want to move on with your life, you have one buyer who's subject to selling their home and another buyer who can buy it and close 30 days, no problem. Of course, that's the more attractive buyer. So,
Yeah,
yeah,
yeah.
I get it. I get
Yeah,
it.
yeah.
Mm.
So, have your eyes wide open on things like that, both the buyer and seller. Just know there's a bit of a ripple effect or a domino effect, and that's where it's really important as the listing agent to ask all those types of questions that you think, can I ask? Yes, you can ask them. Tell me about your buyer. Tell me about their financing. Tell me about
Mm.
what they're selling. Tell me about have you worked with them before and have they closed on the properties they
Right.
said they were going to close on? All of those things, Dion.
Yep. And I think, yeah, that whole extra level of due diligence and communication is so important in today's market, right? So, yeah, I think that's totally fine. Ask as many questions as you want.
Yeah, yeah. Okay, you
Mm.
said something to me off camera, and I thought was really, really interesting when it comes to, you know, the mortgage products out there. There's so many different products out there, but there's some specific opportunities if you're in the medical field, and I thought this was kind of intriguing to me.
Yeah. So, yeah, we'll talk about this medical professionals product. But before I do that, let me frame it and just say every year I get clients who come to me and they say, Dion, my income is $100,000, but I'm scheduled for a pay increase in June or in 6 months from now. And it's going to jump from 100 to 120. Can we use the 120 to qualify? And the answer from every major bank is unfortunately no. We have to use your existing income. Future income is not something that we can use. Okay. When it comes to the medical practitioners' mortgage products, that rule gets thrown out the window. Okay. And I think it's just because that lenders understand that people who have dedicated 8 years of their life to study medicine and go into a medical field are going to obviously build a career in that field. And it's proven that doctors over time will earn hundreds of thousands of dollars. So right now, I have a file where we've got a client who's right now currently in residence, making about $80,000 as a trainee doctor, but and will do so for the next couple of years. But there's a schedule that is basically with every major lender, which says, okay, even though this person makes 80,000 a year, if they're in this profession, and let's just call it a GP, a general practitioner doctor, we might be able to use anywhere from 200 to maybe even as high as $300,000 as their income, even though they don't earn it right now, because that is on average what they would expect to be earning in several years from now. So, if you're a medical practitioner or know someone, or if you're a realtor working with a medical practitioner, just know that this product does exist. And we just helped one of these clients purchase their home for, I think it was $1.3 million. And they would not have achieved those numbers based on existing incomes, but they know they can manage that payment, and the lender is approving that deal based on a higher than actual income.
I love it. I think that's such a cool way not only to educate some of your buyers, but if you're a realtor out there or another mortgage agent, to educate yourself on it. There's so many different ways to look at this and to help people move forward with decisions like this is incredible. Okay. I want to sell my house and I want to sell it to a family member, but they don't have all the funds for the down payment or to close
Right.
on the property or what have you. Is there a way around where we can write up the deal or transfer some funds through a gift or what have you? How do we do something like this?
Yep, the answer is yes. So we've got a
Yes.
deal right now going like this, where we've got an older gentleman who's selling the property to his daughter, and he is gifting the majority of the down payment. So again, I'll just use round numbers. Let's say the price is $1 million. The 20% down would be 200,000, and in this case, the father has graciously offered 160,000 as down payment, not as cash, but as equity that exists in the property today, right? And the client has $40,000 of their own money that they will put towards the down payment to round off the total 200K. So the question is, will the lender recognize the $160,000 equity in the home as down payment? The answer is yes. It's as good as, the dad dropping 160 grand cash into the daughter's bank account. So the lender will recognize that. Of course, the property needs to be appraised, as would any property. And as long as, it values at $1 million, the daughter qualifies for the 800K mortgage, yes, they'll recognize that down payment as gifted equity and usable down payment. So yeah, if you're thinking about doing that, and this is not the first one I've done a couple of these in the last couple of years. People talk about, we had some discussions about early inheritance, Gary. And if this is a one form of early inheritance where you can help your child buy maybe a property that you own and get them into the property market when they otherwise would not have been able to do so, then this is one way to achieve that.
And I can already tell what people are thinking in a sense. Well, if it's valued at approximately $1 million and the father was going to provide $140,000 or $160,000, why not just drop the price by that much?
Right. Yeah.
Go for it. I already know
Okay.
what the answer is, but you go for it.
So the problem there is that the lender will only lend 80% of the lower of the appraisal price or the transaction price. So even if the appraisal came in at $1 million, if dad sold the house to his daughter for 950 grand, then 950 would be the recognized value of by the lender, and they will only lend 80% of that number, meaning the daughter won't get the mortgage that she needs in order to be able to buy the property. So we've had to explain that to some clients as well, because it also saves on land transfer tax by reducing that number, right? But we sometimes need that actual market value number in order for the lender to be able to lend the amount they need to lend.
Yeah, that's right. You drop the price to $950. You still have to come up with that 20% down, that sort of thing, and the land transfer tax, depending where you are. If you're outside of the Toronto area, the difference there might be $1,000, quite frankly, or not even. Of course, if you're in Toronto proper, it's going to be double that. But you're not buying typically a detached home or anything like that for under $1 million in Toronto. So, but that's the important conversation piece, and that's why it's important to have these types of conversations when you are selling to a family member and understand the difference of dropping the price versus. We can do it through
Gifting the equity. Yeah.
The equity. Exactly. That's my man. There's always lots going on in the Canadian real estate market, and just as important to make sure that we have our finances in check. Remind everybody how to get a hold of you.
Yeah, you can find us at kangamortgage.ca or Instagram at @thedionbeg.
There you have it. That's Dion Begg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.